What's up, guys? This is Borrow 3.88. This channel is created to explore and grow with you all together during current crazy global financial market. Please strike a like and subscribe button down below with your comments and thoughts. We will donate to the charity recommended by you based on the number of likes and subscribes and disclose everything in detail every month. Let's always do something good to the society and the community. Other than trading and investment, please always set the top priority for your own health and happiness, as well as good relationship with your family and friends. So thanks for your watching today. And in today's video, we're gonna talk about a very hot topic going on recently. That's the Bitcoin just pulled back to take a healthy break for the next jump all the way to 100,000 price target by this year. Okay, so as most of you may have been paying attention that Bitcoin just dropped almost 30% last week from its all-time high, about 65% in this April. But that might not make the 100,000 price target any less likely to happen this year though. Bitcoin has surged over 200 times in the past few years, with 52 weeks range for almost 10 times. As the top one cryptocurrency, Bitcoin accounts for over 50% of crypto market share and is speeding up to become one of the norm in today's financial market. In fact, according to some analysts who support a 100,000 price target by 2021 for Bitcoin, a healthy pullback might actually help strengthen to power up for the next bull run. This event could be something totally different from the top in 2017, which comes with an 80% collapse afterward. It seems to be more likely that the market just needs to have a healthy cooling down this time before the next bull run. Among many of those analysts who predict the significant upside to come, many have expressed that the Bitcoin boom and bust cycles are actually linked to Bitcoin's coding and mining mechanics, which automatically cut the price in half roughly every 4 years. That's the price paid to miners who confirm transactions in the network. It's also called Bitcoin halving. Here is a quick introduction about Bitcoin halving.
You've probably heard of something called the Bitcoin halving. What is it exactly, and why is it a big deal? Bitcoin is often called digital gold, because just like gold, Bitcoin is a valuable, scarce resource that's resistant to inflation. But unlike gold, Bitcoin is digital. It can be sent globally, almost as easily as sending an email, and its scarcity is known. While it's estimated that one could fit all the gold ever mined into a box that is only 65 feet wide, there's no way of knowing for sure how much gold is still in the earth. Bitcoin, on the other hand, has a finite supply of only 21 million Bitcoin, with only around 3 million left to be mined. But what gives Bitcoin its scarcity? Just like gold, Bitcoin is also mined. But this is done electronically by a global network of computers, competing to verify Bitcoin transactions. The reward for participating in this virtual mining is Bitcoin, 12.5 new Bitcoins to be exact, and this reward is given out about every 10 minutes. But in May 2020, this reward will be halved to 6.25 new Bitcoins created every 10 minutes. This event is known as the halving. Nearly every 4 years, the Bitcoin mining reward, also known as the block reward, is halved, and so on and so forth, until all 21 million Bitcoins are mined, estimated to happen around the year 2140. It's impossible for more Bitcoin to ever exist. This is contrary to fiat currencies, where more money can be printed at the discretion of the government or central bank, potentially leading to inflation. Because of Bitcoin's halving, with less supply being made available over time, Bitcoin is designed in a way where it's more likely to increase in value, rather than decrease like fiat currencies. This feature of Bitcoin's protocol is what makes Bitcoin more scarce over time, and scarcity is one of the reasons why Bitcoin is sought after by millions of people.
In May 2020, Bitcoin experienced its third halving when the miner reward was automatically reduced from 12.5 to 6.25 Bitcoins. Historically, Bitcoin price has always rallied after those halving events. The recent rally recorded by around 3,000% followed 18 months after the second Bitcoin halving. On top of that, other technical traders have increasingly pointed out how well another model linked to Bitcoin halving has tracked Bitcoin price rise over the past couple years. Referring to the stock to flow model, on Twitter as S2F, it measures existing supplies, usually of commodities, against the flow at which new inventory is produced. In the case of Bitcoin halving events, by definition, cut the flow in half. When applying the measure to Bitcoin, many cryptocurrency hedge fund managers have expressed their surprises at how Bitcoin price has moved in pace with the projections. On Twitter again, another widely followed technical analyst also pointed out that a chart with longer trend shows a similarly predictive path for Bitcoin price dating back to 2012, and actually expressed a relief at the recent pullback that actually bring Bitcoin price movement even closer to the model. Alright, let's let alone Bitcoin for a while. The volatility in other cryptocurrencies also point out for the continuing upward trend rather than simply a top for crypto uptrend. The second largest cryptocurrency by market capitalization, Ethereum, has just dropped only about 5% from its most recent high. One of the things that does give us a bit of confidence is that if you look at other large digital assets like Ethereum, which has been doing pretty well in relative terms on a relative basis even during the recent pullback. So it could be a strong indication that a big segment of the market are actually seeing increasing capital moves here around cryptocurrencies with more focus on Bitcoin. And we're not really seeing any significant capital outflow here so far. Dogecoin is another story to talk. Even Dogecoin has induced tons of capital right now. The price has surged over 100 times in just a few years, simply after Tesla CEO Elon Musk sponsored. It's a cryptocurrency originally created as a joke, but already turning into a joke of gold right now. There are much more from the other cryptocurrency to talk. So cryptocurrencies have undoubtedly become something making the future of financial world. While Bitcoin accounts for over 50% of the entire cryptocurrency market share, this week, Morgan Stanley just disclosed that it has raised nearly $30 million from more than 320 investors for its new cryptocurrency fund in just 14 days, according to their new filings. On the other hand, Goldman Sachs is also said to be rolling out investment access to Bitcoin and other digital assets for wealth management clients soon. And from the regulatory perspective, the SEC also officially acknowledged the third active Bitcoin ETF filing for reviewing right now. So with all that being said, it's not hard at all to reaffirm with the 100,000 price target for Bitcoin by this year 2021. However, short-term volatility is definitely expected to be continuing. If you are a price action day trader for Bitcoin, maybe the volatility is something you should take into account. But if you are an investor with a relatively longer term allocation, maybe it's always a good chance considering buying the dip along the way. Okay, so thanks for watching today. Don't forget to check the like and subscribe button down below with your thoughts, comments, and insights. We're really eager to have more interaction and discussion with you soon. Otherwise, I will see you until next time. Check it out.